What's up, guys? Today we're talking about Airbnb. And if you're interested in all things finance, passive income, and dominating the markets, then go ahead and subscribe here and leave me a comment that says, I subscribed, and I'll be sure to get back to you. Getting started with this highly anticipated IPO, it is no surprise that they have raised the price target again to a $42 billion market cap projected valuation. So what this means effectively for us is that they're intending to open the trading between $56 to $60. Understand that other stocks do not necessarily mean that you can project their price action onto a new IPO, but that doesn't mean that you can't take something from it. From what I can tell, despite the type of stock or what the company does, we're seeing just crazy bull price action on almost every stock. So let's just go take a look at the last couple from the past week or so. All of these stocks currently on my screen are recent IPOs that have more or less found their way to some kind of crazy bull movement over the past week or so. So if I were a gambling man, I would guess that Airbnb or any other stock that is remotely bullish, has remotely bullish sentiment, is going to do something similar to what these stocks have done. Second part of this equation, building a bull case, is just going to ask ourselves, like, how much hype do we think this stock is going to have? And unfortunately, this is kind of what dictates a lot of the price action these days, is just how much awareness do people have going into the IPO and what their feelings are going to be about it. And with Airbnb, people are incredibly familiar with it. It's everywhere. I mean, it's totally disrupting the travel industry, and everyone wants to use it for one reason or another. Despite the slumps here in 2020 on some of the revenue due to the pandemic, every year prior, the number of users, the number of bookings, the number of revenues have just totally taken off. I mean, look here, we've gone from 25 million in 2015 to over 187 million in 2019. We've got listings going up, we've got revenue going up. The valuation has been flip-flopping. We had a nice little tank here in 2020 just due to the fact that they lost a lot of revenue with the pandemic, but just like all of these other stocks, it's going to be one of those recovery stocks that benefits a lot from when we start to reopen back up. Additionally, from a long-term perspective, these growth numbers have shown consistency, and we know that the CEO has a similar incentive structure tied to the price as, say, Elon Musk with Tesla and some of these other companies, where it's in their best interest to continue managing the company and help it grow. Long term, our biggest risks are just trying to see how they're able to manage the future regulation implications and certain markets trying to push them out, and also that management continues to stay on top of it and be effective. Beyond that, they're poised to continue to disrupt the travel industry. Before the pandemic, they were absolutely murdering the hotels and everyone else that wasn't using their platform. They were creating new jobs for people to host their properties and new income sources for property owners. I mean, really, it's just kind of changed the way that we go on vacation, we operate and work. And I don't see that changing anytime soon. And in fact, I think it's even more disruptive than Uber in some sense. That said, if the pandemic hadn't happened and some of the revenues dropped by 67% due to the shutdowns, I think that we would have seen an even higher revenue growth, a higher number of bookings, and a higher valuation. I would not have been surprised if having all of those things fallen into place, that the IPO price would be significantly higher than it is now in a bull market. So that's another point to keep in mind. Also, it's almost crazy to say, but I went back and did a case study on the 420 IPOs that have already happened in 2020. And as of December 7th, throwing $1,000 in each one, you would be up over $140,000 just on the IPOs this year. that would be netting you a 33 to 35% return on every dollar invested. That's almost 3 times the amount of money if you were just tracking the market with an index fund. Despite building this incredible bull case, that doesn't mean that it's 100% sure thing that we're going to wind up ripping out of the open and never coming back. There's also a few points of concern that we need to take into consideration as well, and not just blindly all in on this stock. Virtually every single person that has ever invested in Airbnb is walking into it the first day with shares that are up either 2 or 3 times what they invested in. So at a valuation 2 or 3 times. So they're up at least 100% in the past couple of years on this stock. So that means that at some point or another, there are likely to be some of them that are interested in liquidating some of that position. It's a big question of how much and when. It may not affect us for quite some time, but there's still a potentiality for it happening. The first day that the stock launches, there will be insiders that will have access to 15% of their shares. Usually with IPOs, they make sure that insiders with large positions are more or less sidelined and unable to sell those stocks for a defined period of time. It's usually three months, 6 months, or a year. Sometimes it's even further. So that could equate to hundreds of millions of dollars if these people want to liquidate. So that may be something that some of them come in and wash out their shares, and it'll have to be absorbed before we can push further. Moving on to more of my specialty, from the perspective of a day trader, this is where we really want to pay attention. I will absolutely never buy the first few candles of a new stock. There's no history to tell me what the heck is going on with it. And because I don't want to be a bag holder, I need to wait for smart spots to get in with a nice risk to reward ratio. So what I do on an IPO is I come out on a 1-minute chart and I wait for the stock to bounce around for a few minutes, just like the open every day, and then try and look for really defined small supports and resistances that get formed over the first 15, 20 minutes, and then play around those spots. So just real quick, let's go ahead and take a look at one recently. I think LAZR was a pretty good example. Here we are with LAZR, pre-market on the day it IPO'd, we had a bunch of price action. It was pretty volatile. I mean, that's almost a range of 10% here. But what you can kind of see is that this $22 level continues to be a spot that it would get hung up, or just it formed a support and a resistance a couple times. So that would really be the main place I'd have to mark on the chart. Yeah, so price opens, it shoots up, it gets above. None of this is anything I'm going to be interested in. I mean, this is just far too fast and far too volatile for me to risk becoming a bag holder here. So the first spot that I probably would have entertained this stock was after it ripped up here and then just dropped down to 22. I mean, from nearly 25 down to 22 on 1-minute candles, that's over a 10% drop in less than 5 minutes. So not only is that extreme, which should warrant some sort of relief bounce, not always, but it should, it also came directly down to this little support area that seemed to be something of significance pre-market. So my first entry would have been probably in this area, and I would have sold on that first candle up and then waited to see what would happen again. Well, you came down here, and what do you know? This level it drips into, and then it snaps from there. It's unlikely that there would be shorts available for this, but if there were, that would have been a pretty solid short opportunity. And then after that, there's not a whole lot going on that I would be interested in. However, that said, you could draw a nice downtrend line here and then look for somewhere that, maybe it's dropped very heavily. This is from 25 now all the way down to 19 without a significant bounce. There's going to be some relief on this stock if there's any sort of interest in the market. So we drew our downtrend. we got some price action above. It consolidated here and then rose above the 2050 level, and I probably would have gone in long somewhere in this area for a nice little scalp up into the VWAP, or maybe if I was lucky, all the way back up into this resistance, former support turned resistance here. So basically the idea here is to find spots in the chart where you have resistances, where you have supports, where you have trends that break on the lower time frame, and try and play within the trends. Downtrend here, breaks downtrend, try and ride up the trend into resistance areas. In highly volatile stocks like this drop here, we're looking to take advantage of the extremes and then to sell the means. So like I said, this big drop, we want to get down here on the extreme part of it and then sell as it reverts back to the mean. And then from there, we're just looking for trends that break. We're looking for more extreme dips into, support levels, or like over here where we have this nice downtrend channel happening and then it breaks above it and gives you a little time of consolidation to hop in long. Those are the type of trades that we're going to be looking for on an IPO stock. And when we get into maybe say a trend break over here, we're going to sell long before it gets up to a resistance level or another point of interest, because as day traders, we're just trying to take advantage of the inside moves within the major trends. This right here is not a trend move. This is a relief bounce of buying the extremity and selling closer to the mean. Just like down here, we would miss most of this move unless there were shorts available. Then we could have shorted this break and probably covered somewhere in this area. But this is the safe way to play, where you're not sitting over here hoping and praying that the huge bull case is going to take us flying higher. You're using specific places on the chart that historically there has been interest. That's the only data that we're going to have, so we have to take advantage of it. In conclusion, this one's going to be an absolute doozy, but be sure that you use logical entries and you stay calm and be extra conservative on a day where you should expect crazy volatility in a stock like this. We're here to make money. We're not here to gamble. That said, thank you for watching and good luck. I'll see you in the markets Thursday.